the audio that's...
Well, as I was saying, one of the best things you can do for your career is to have fantastic Excel and financial modelling skills. So Lance is based in Melbourne, and he has just... So I had these meetups in Sydney, Melbourne and Brisbane, and I don't get to Brisbane and Melbourne as much as I used to. And Lance has just taken over the Melbourne one, and he's got one coming up very soon.
April.
Yeah.
So it's being hosted by SAP Signavio, and a lot of it is going to be focusing on the current state of financial modelling.
I need to use this microphone. Yeah.
Sorry. Oh.
Yeah.
Okay.
Anyway, he'll tell you about that. But yeah. So yeah, if you, for anyone who's in Melbourne, think about coming along to that one.
And it'll be hybrid as well.
Right. Yeah. Fantastic. Okay. Well, I'll hand over to you, Lance, and let you do your thing. And I'll be monitoring the chat in case anyone has any questions. Just pop that in the chat, or for those who are in the room, just raise your hand, and I will bring over the microphone. Take it away, Lance.
Thank you, Danielle, and thanks everyone online, and thanks everyone for coming. It's really exciting because if I look back at my own career, I started as an accountant, I started at PwC, and then went into investment banking. And it's really when I got into investment banking that I learned financial modeling. And now, yes, my accounting skills were important, but looking forward, cash flow modeling, analysis started to become my bread and butter. And then I left the investment banking world and went back into the finance team. And through that, I've had all these different roles. And I've realized having financial modeling skills is a ticket to the game. It is so, it opens up so many more doors for you, particularly as you get to the CFO role. And we had a little chat earlier about, is Excel, when you get to that level, is modeling skills seen as below you? And I actually think it's not. I think that's probably one of the issues, is people think it's below you, but in fact, it's not. So tonight we're going to do a couple of things. We're going to do a live poll as well, which I'm going to ask you to take your phones out in a second, to do live Q&A. People online can see it as well. It's just some of the questions and thought, if I had known some of these things and if I'd thought about it in this way, I may have done things slightly differently. So we're going to do a reality check, right? So a little bit of a reality pulse check in terms of, so if you go to menti.com, so menti.com, I will bring it up. So for those online or those here, menti.com, and the user code you can type in is 7405417. So the first question, and this is things that often get confusing for people. Can you clearly articulate the differences between financial analysis, data analytics, and financial modeling? Because I often see this being used interchangeably and differently. And if you don't understand these concepts, then sometimes we might be thinking we're doing a financial model, but we're actually doing financial analysis.
Just give me to pop that on.
So please vote online. And we'll wait to get as many responses as possible while I just attach this. Okay, so most of you, now it's got to talk a bit softer now. Most of you clearly know the difference, which is good, but there's still a little bit of uncertainty. Anyone want to have a crack explaining it? Some of the yeses.
No, so I think this started with data analytics. I guess data is quite broad, it's not necessarily financial data. So understanding perhaps more of the econometric techniques that are obtaining meaning from data, which is going well beyond just financial numbers. Management analysis is related, yes, currently financial. Context of a business. So what does that business look like when you put the scaffolding when you put the scaffolding of a financial model around it, to actually get true meaning of that business model. So that's the way I'd see it. Yeah.
Any other takes?
Yeah, I would say that financial analysis is pre-built models. It's pre-built. You know exactly what you're doing. Data analytics. You are looking at some very complicated data, and you don't always understand what you're looking for when you do that analytics. The financial modeling, you are trying to discover something. You're building a model to show a break-even point on a business potential or something like that.
Yeah, that's really good. So the way I explain it is financial analysis is typically backward looking. It's just analysis, and it is financially focused. And so both of you are on the right path in terms of understanding basic analysis. Very often, you need to do a bit of financial analysis before you're doing any modeling. Data analytics is financial analysis on steroids because it's much bigger data sets, and you're right, outside of the financial realm. But you tend to, yes, you can still do data analytics in Excel, but you're going to run out of puff at some stage, and that's why you need to look at things like Power BI and data warehousing, and that's the path to AI as well.
And we just have Gary online saying that modelling focuses on the future as analysis looks at the historical.
Waiting for that. That's not technically correct, because predictive analytics is forward-looking, and prescriptive analytics, which prescribes an action, is also forward-looking analytics. So I think this is where people fall into a trap. Analytics is not just backward-looking. Advanced analytics is forward-looking. It's predictive. That's your data science. That is your AI. That is your decision-making engine. So I think this is where often people get confused, where it's saying, I'm doing data analysis and data analytics, but there's much more. It's much deeper. It's a data-driven decision-making, as opposed to financial modeling is more human-driven, forward-looking, right? They both can be forward-looking. You've got your 4 types of data analytics: descriptive, diagnostic, predictive, prescriptive, right? So data analytics, much broader, much wider. Welcome, Ian. Ian, we're just on Menti. We're doing a live poll. We've got some people online if you want to join. Honestly, would you consider your Excel models or analysis hygienic for others to consume? Now, what does hygienic mean? It means structured and easy to use, no fur balls. I used to have a cat. You have a cat with fur balls, you've got that coughing sensation. I feel like as a CFO, I've looked at too many spreadsheets and I felt like I'm coughing when I look at things, particularly when I find a hard code, particularly when I see inconsistent formulas and all the warts and all of spreadsheets. So sometimes we should just think about how we do certain things and how we approach our models and how we design them, because if we don't think about the end user in mind and what they're going to do, then we jump straight in and we build. And that's where fur balls start to happen and we're not structured. And so I think this is a really important point in terms of, if I'm a CFO as opposed to a modeler, I want to make sure that my team are building something that I can use, or that I can use in conversation with others that are not necessarily financially literate. So that's the purpose. We need to do better. And clearly there's a lot of people that recognize we could do better. Have you built a fully integrated 3-way cash flow model? Does everyone understand what a 3-way model is in the room? Yeah. So menti.com is the URL, and you need to type in the code 7405417. And did it have at least 2 of the 3 S's? And I'll come back to the 3 S's. So a 3-way cash flow model is integrated your income statement, balance sheet, and cash flow. Too often people say, oh, yeah, I've done financial modeling, I've done a P&L, or I've done a cash flow, and no one does a balance sheet. So why bother? Balance sheets are probably one of the most important things to make sure that your cash flow is correct. And I always say this, if you don't have a balance sheet in your model, how do you know your cash flow is correct? If you don't have a balance sheet, how do you know your P&L is correct? You know what? You don't. You don't know that you've got everything in the P&L and in the cash flow if you don't have a balance sheet. And I know balance sheets are hard to model, but once you know how and once you get that approach, it's actually not. 2 out of the 3 S's. So to qualify for a financial model, you need to have sensitivities, scenarios, and in very limited cases, simulations. So that's why I say, if you're going to build a financial model, you should have, at the very least, sensitivities and scenarios. Otherwise, it's not a model. It's just a forecast. And that's what I've seen. As a CFO, the biggest value, and Alex said it before, is the what ifs, is the scenarios, is the, what am I going to get out of this? Because like the great statistician George Box said, all models are wrong, some are useful, right? We know it's going to be wrong. No one can predict the future. So what's the bookends? What's the, and look, it's great to see that a lot have. So we've got a lot of people that have. Not sure what that is. So hopefully after I've explained that, now people, when asked, in the beginning, I guess when I first started talking live about financial modeling, I was always a proponent of 3-way modeling. I was like, you don't know financial modeling until you build a 3-way. And I think that I still stand by that, because I think it's an important discipline as a financial modeler to be able to build a 3-statement model. You might not need it every time. Sometimes you just need a P&L, you need budgeting, but to really get yourself up to speed as a financial modeler, that's why the FMI has, as the Advanced Financial Modeler certification, your first level entry is you build a 3-way model, as part of that process. Have you ever built a model that has a scenario manager to influence stakeholders? So it's one thing to build the scenario manager, but if you've actually taken that and gone and used it and really influenced stakeholders.
That is whole idea, isn't it? The influence.
Yeah, absolutely. So I think, an important part is, having that ability to influence. That's the value of modeling. It's that ability to take a model, but not only to take the model and use it for scenarios, to use scenarios as a way of checking, is the model correct? Does it give me the answers that I expect? And if you don't have a scenario manager, guess what? You're guessing. That's the reality. So if I start to build a scenario manager, I can start to understand the accuracy and then be confident to go and have a conversation. You've got to like some of these gifts. They're really quite emotive. So I think the big clap, well done for 24 of you, I think is really impressive. So keep it up. For those that have not done it, again, it's another area that you should build out as your capability, because as a CFO, you need to influence your fellow leadership team members. You need to have a really robust conversation with the head of sales and marketing and tech. Why they're spending their money, what's the return, what are they going to do, what are the outcomes? You can't do that just with one set of numbers. You've got to have some sort of scenarios to play what if in those conversations. Okay, bit of a curly one here. Are you up to date applying automation tools, best practices, and formulas in Excel? Power Query, dynamic arrays, and lambdas. Now, I don't think a lot of people have played with lambdas. I'm hoping a few people have played with dynamic arrays. And please tell me everyone's played with Power Query at least once, or you should actually know what it is. So, no, got some catching up. I expect that to be the majority of this one, but just quickly in the room, show of hands, lambdas. Yeah, no, I expected yours then too. I was like, why is he putting his hand up? Dynamic arrays. Yeah, good. And Power Query. Come on. Okay. All right. A couple of hands stayed down the whole way. So, yes. Well, I think one of the things that we've done within Model Citizen is gone off the reliance on third-party entities to build models. And we've done that through the innovation of Microsoft, through the creation of lambdas and dynamic arrays, because rather than building a model with someone else's software, you've actually got really robust calculation engines, formula engines inside dynamic arrays and lambdas to really build logic and spill a lot of those calculations. Now, yes, the formulas are a bit more hairy to read, for sure, but at least I can control it. At least I understand what it is, and at least I don't have to force someone to buy a third-party application, which has been one of my biggest challenges for years. But I think the important thing is there is so much, excuse the pun, power in Excel at the moment. And I think as a CFO, again, it's about what's actually under the hood.
A bit more exciting then.
What do you mean? It's impressive what tech is there, and it's only going to accelerate through Copilot and other elements. So I don't think Office scripts has quite had a big impact as what many people were expecting, but these have definitely had a certainly for financial modelers anyway. Have you conducted any form of change program for the accounting and finance team? New budget or new planning model build is an example. So when you start to get into this role of the CFO and you're a financial modeler, finding those opportunities to change the way people work and change the way people build things is a great way for you to learn how to manage change. Now, one of the challenges, as we've seen with technology, is technology runs ahead of change, and now we have to catch up. So a great way for you to hone your own skills is putting yourself in that position where you're involved in a change program, where you actually have to coach, lead, design, have conversations with people, because now I'm not in my spreadsheet, I'm actually having a conversation on how people work. And I can't tell you how often that becomes useful as a CFO when you're trying to lead a team and you're trying to get more value out of the team. And in finance, we get so bogged down with month ends, annual budgeting, quarterly reporting. People don't have the time to learn new things. So we have to change. And I think that's an important part. Fairly substantial part, obviously, of those that voted still don't have, it looks like almost just under a third have not done that. And again, I think it's a great opportunity that you can explore. Have you ever outsourced work remotely? I think the outsourcing, drive has sort of flip-flopped quite a bit over the years, but it's still a very big enabler. And when I started Model Citizen, which is now 8 years ago, LinkedIn reminded me, I started with an entirely outsourced resource base, including modelers that I put through a program to make sure that they were competent enough to work with me. And then since then, I've got full-time staff, but now we've got an influx of work, and now we're looking at outsourcing again and getting more people in. And the reason I say this is an important thing is because, again, it comes down to how do I pull a lever on capacity for the team? As a CFO, you have to think about, I want to do so much, yet I can't go and hire. Well, what happens if I try and hire smartly or hire offshore? And again, it's about how do you do that? How do you do that in a way that is, you've got to be careful of data, security, all of these other elements. Some clients will not allow it. So your data has to stay in Australia. If you're doing anything with the Australian government, you cannot take any data offshore. So that's one thing that obviously that won't work under that model. But, it's not just about the fact that it's being outsourced, the fact that you have to document the work, understand the process, because also it lends itself to automation. And I think that's been one of the hurdles, is not being able to document, understand what the team do, means that we can't actually improve the way they work. And potentially outsource, but outsource is one of those elements. It's a nice, easy way to do that. Any questions online? No? So this is the crux of the value as a financial modeler. Have you ever built a model that's created significant value?
One thing, when you go outsource, how, in your opinion, how Excel help? Are we actually lately outsourced the data? And what we need to do is building some spreadsheet to monitor their productivities. Yep. And accuracy as well. So in your opinion, what kind of thing we need to aware of?
There are so many opportunities with outsourcing because it gets you to stop and look at the process and also design a similar way of working. So there are automation tools that exist. And if you design standards of working and best practice, then people can do work for you while you're sleeping and you wake up in the morning. But you have to make sure that lifting and shifting a process that is inefficient is not a smart way to do outsourcing. What you've actually got to do first, before you even think about outsourcing, is do we have processes that are consistent? Do the team know how to work? Can they see the value of being able to work within the same country, just to start off with? And one of the things that I absolutely know, and one of the things that is lacking, is I was part of the KPMG modeling team. Ian runs the PwC modeling team. Consistency in how you build models is critical. It is a must. If you don't have that consistency, outsourcing inconsistent processes is a nightmare. So how you get value is making sure that people know how to work in the same way. My time series starts on this column. My monthly, I'm not going to have month, quarterly. The amount of times I see that, it drives me insane. Quarterly, month, quarterly, month, quarterly, month, quarterly, annual, all on the same sheet. That is a recipe for inefficiency and a recipe for disaster as well. So every time you have to update and roll over. So outsourcing really forces you to be disciplined, because labor arbitrage is not good enough. You've got to also look at process re-engineering. You've got to look at automation. So there is huge opportunity to do that, but you've got to define a way. So when I started to outsource, the first time I did outsourcing was I was at the National Australia Bank, and I was a finance business partner, and I had month end, and I was posting journals for the bank's provision for doubtful debts. And so, that was my role. When the outsourcing bus came along, I'm like, take it all off me, because I want a month end pack. I want to go have a conversation with the business. So it frees up my time to have real business conversations as opposed to sitting behind hitting the keyboard. So that's the real opportunity here in terms of outsourcing. You've got to look at automation and efficiency and standard ways of working in order for you to get that benefit. So it's not just a labor cost arbitrage. It forces you to get robust in terms of how you document the process and then move it. That's what I'm saying. Until you outsource, no one's going to do that work. It's a great catalyst to do that work and get some efficiency.
Yeah, I think I agree with that in a way. We make sure that our locally have a good procedure policy first, and then based on that, we compete whether we can be working overseas, and then how we monitor based on the local culture. So that's what the first step we do, and then every step of the way we actually recording what they have done, how they spend their time during the day, and how we're going to we basically adopt a policy, not find the time, their hours, find the quality.
Absolutely.
Of the productions. So that's what we adopt. I think it works quite well at the moment.
Yeah. Well, I mean, one of the downsides to outsourcing is the ability to innovate and automate. So sometimes you have to bring it back onshore. You automate, innovate, send it back.
And I guess I don't want to get too much into the into the rabbit hole of outsourcing. We just had a comment or a question from Hayley. If you noticed any changes since the remote working environment, I think that's kind of changed the way things work.
I think remote working. I mean, I joined Cash Rewards. I'm into almost my 6th month. So I'm a CFO for an Australian business, and I'm based in Melbourne. And I come into Sydney maybe 2-3 times a month. You would not be able to get a CFO role in a different city if it wasn't for what we went through. One of the things I've started is outsourcing as well, because we had some capacity, because it's they embrace remote working more so now than what they did. I think outsourcing is less of a risk, but less of a cultural challenge. People see the benefit of what I can do by taking things elsewhere. So there's definitely, I feel that there's a bigger appetite, and because more people are now got the tools to be online, Other locations have upgraded their systems and technology. Back to this question, I think as a CFO, and particularly as a financial modeler, making sure that you're involved or at least contributing towards the generation of value. Everyone says, oh, I need to do value add. What is value? Value is exactly what's on the screen in terms of being able to show an accretion of net present value or discounted or cash flow in terms of the business. That is the value that you can bring, and you can actually measure it. People say you can't measure value. You can, but you have to be good at modeling, and you've got to understand what are the things that you can bring towards it. So if you haven't done that, absolutely look for those opportunities. Look for those opportunities to do that, because you can add a lot of value. Number one, others can see the value that you've added. I think in some cases, I wish I was on the other side of the table, not being the modeler. I wish I was the equity holder on some of the models that we've built, where we've created, I think the most value I've created for someone is about $50 million on a model. So that's value, equity value at the end of, okay, yes, it was 25 years, but there was cash at the end of that model of that amount. So that's hugely valuable for them. And that's navigating banks, government, funders, operational risk, and all of that. A bit of a word cloud. What is your single word to define the biggest gap financial modelers have to becoming a CFO? So if you had to say, single word, what do you think is the biggest gap that financial modelers have in becoming a CFO? What would you say? I'd be keen to see what pops up. We'll see how much alignment there is. I think there are a few gaps, but I'll come on that. Oh, I like that big picture. Yeah, very difficult. Modelers are very, very detailed, very focused, very granular. It's hard. It's hard to step out of that. Communication, leadership.
Someone says execution.
Yeah.
On the chat. Looks like leadership is popular.
And I think that's the challenge, right? As a financial modeler, like you're really good at working in spreadsheets and models and analysis and data, but at some stage you have to step out of that. I'm not saying ignore it and don't ever do it again. I think that's probably a bit too extreme. And I think that's what people think, well, now I'm the CFO, I don't need to do that stuff. Well, actually, no, you still need to. You need to understand that the models are working and there's no gremlins in them. But communication, leadership, storytelling. I was waiting to see whether a non-technical skill was going to come up prominent here, and I was right. So communication, leadership, confidence. These are things that, as a financial modeler, you don't really hone in a spreadsheet. What you do hone as a financial modeler is stakeholder management, is going out and understanding what people are saying. It's listening and converting conversations into logic. So there's a lot of things that you're doing inherently that you're not recognizing as a skill that is part and parcel of financial modeling that we don't focus enough on. We think it's all about Excel and spreadsheets, but it's far broader than that. And if we don't put enough attention to those other softer skills, actually, I hate the word soft because I think it's actually harder. But anyway, you say hard technical skills and softer skills, but I actually think it's the other way around. I think technical skills are easy over time to master. I think the softer skills are harder to master, and we'll talk about that later. Have you ever conducted Excel training or supported that internally or externally to others? I have to say, in my career, I hadn't up until the time just before I left the bank. And now, obviously, I do a lot of it. And one of the benefits you get as a trainer is you get to step away from your skill sets to actually, again, back to the communication, back to the support, back to these softer skills. As a trainer, and I'm sure Danielle would agree with me, there are a whole lot of other skills that you need to develop to do that. And it's a great opportunity. If you're good at Excel, just run an Excel course. One of my team in Sri Lanka was petrified. She got asked to do some Excel training. And she was really worried and nervous. And but she was worried that her skills weren't good enough. And I said, your skills are fine. I said, this is a great, I don't want to do it. I said, it's a great opportunity for you to step out of your comfort zone. And again, becoming a CFO versus a financial modeler is all about stepping out of your comfort zone. I have to go into a meeting and talk about numbers when I don't have a model, or have an idea or concept, or these things are great. They're not really sit in the realms of, I know the answer and I can stand behind a model. Sometimes you can't. So definitely an area that you should focus on and look at opportunities to do some training, even if it's basic training, even if it's basic Excel training. Pick a topic, learn it, reach out to Danielle, come stand here and learn. 8 years ago, Joe McDade, who's in Microsoft, and I guess that's how I got connected to Danielle. I just left the corporate world. I started Model Citizen, and I was looking for an opportunity to talk, to get up on stage and do that. And Joe messaged me and said, hey, would you like to do this? Danielle's got an opportunity. And I was at KPMG at the time, and that's the photo that you took that's on that meetup group. That was 8 years ago. And so that was my opportunity to step out. I remember I was so nervous. I was stuck behind. I couldn't. And I think it's about getting used to that, getting used to that environment of being in front, communicating, influence, confidence. Confidence is so important when it comes to being a CFO. Any questions on any of those before we jump back onto the slides?
The question here. When I build the Japanese, my belief is financial information without non-financial information to interpret is meaningless, right? Number one thing. So when I present a model and talk to the business owners, one thing, I may not know everything what they are thinking, but their non-financial information about business is valuable for me to interpret my numbers. How do you build that kind of things into the model can allow them, maybe induce them to make them talk? Is there any way or?
Absolutely. I think this is where one of the tips that I have in the slides is getting closer to the business. I think if we stay too much into the financial realm and financial data, we're missing a huge opportunity. We're missing an opportunity to learn from the business. We're missing the opportunity to connect the dots. As a financial modeler, you're always connecting the dots back to drivers. And hopefully some of those drivers are sitting in non-financial systems in terms of products or volume or other information outside of the organization. Maybe it's, websites, clicks, conversion rate, marketing spend. I agree with you. I think there's a lot of things we get too narrow focused tunnel vision on the finance. Financial numbers are the outcome. They're not the start. So you can't influence an outcome by looking at the outcome. You've got to influence the outcome by looking at the start. You've got to look at what drives that. And if you don't get close enough to the non-financial data that's driving it, then you're never going to get to the point of adding real value. And then also you're not sitting alongside the business. You're sitting on the opposite end of the table. And how many times have you been told, or you've heard, finance or accountants, they're just policemen, they just stop me from making decisions, they control the budget, all of those things that get pushed into the CFO category. Because of that, because we're not comfortable to go onto the other side of the table, which is non-financial data. So one of the things I'm going to talk about and why financial modeling is so important for a CFO, and also some of the types of models that you could get involved in. And these are actual modeling types and modeling opportunities that I've been involved in, and things that you may not necessarily have covered yourself. So the key thing, commercial finance, business partnering, and CFOs need to look forward. That's what the value is. It's all about looking forward. However, we come from a world where we are financial controllers and reporting and auditors, and we're always looking backwards. So the lens of where we're looking is always, not always, in most cases in the accounting and finance industry, it's backward looking. And it's that shift from backward to forward that's probably the biggest mindset challenge. Because suddenly I'm looking forward, where are the numbers? How do I know it's right? Am I guessing? It's very uncomfortable. I think I heard it first from Paul Barnhurst, the FP&A guy. He says, well, you ask an FP&A professional, you ask an accountant to be creative with numbers and he goes into jail, and you ask an FP&A person to be creative with numbers and they're adding a huge amount of value, and you're on a pedestal.
That's a good one.
That's the challenge.
Did I see you got interviewed by him recently?
Yes, on the
Yeah.
financial
Oh,
modelers.
I haven't heard
corner.
it. Financial Modelers Corner, it's called. It's good. Yeah.
Yeah. I raised it in that chat because I think that's to me, I think the biggest mindset shift that we've got to go through as finance people. If we want to become a CFO or commercial finance or finance partner, you've got to look forward. I know it's scary to look forward because now I'm going to be wrong, so I don't want to put any numbers forward, but that's okay. You can say, look, this is only an estimate, and the estimate's only as good as the logic and the assumptions that go into it. And guess what? You don't always necessarily have to own the assumptions. You can work with the business, and sales gives you forecasts and assumptions. And you can then translate that into working capital. So the best way to look forward and be strategic is financial modeling. It really is. It is the secret ingredient to you being strategic, to looking forward. Through my time as a CFO and through my consulting, Model Citizen building models, I've come across strategic consultants. And almost every single strategic consultant has built some form of a model. They have. I wouldn't call it best practice by any stretch, but they're certainly better models that I've ever seen out of the accounting and finance teams, which is just a budget or a forecast. So because they understand that looking forward has pros and cons, it has trades, it has ups and downs, there's risk, So I think being a strategic consultant looking forward, this is the superpower that you need to hone and take through with you as you go from financial modeler to CFO. Don't forget it. Don't ignore it. It is where the value is, where the most of the value lies as an influencing CFO.
We just got a question on the chat. What is your best takeaway tip to communicate your findings from the financial model and practice and improve the skill? Is that something you're addressing later, or?
I talk about the soft skills and communication, but I'll answer it now because it's relevant. There's a great principle called KISS. Anyone heard about it before? Keep it simple. And I won't say the last one because it's a bit insulting, but keep it simple, right? Sometimes we think we need to prove that we are smart or that we know what we're talking about. So we overcomplicate the message, or we put in information that is factually correct, but confusing as hell. And so we've got to have that balance. What do I say? What do I not say? Oh, if I don't tell them this, I'm lying, I'm hiding, I'm not giving information. Your challenge is to tell the story in the way that the people can understand it, that you're communicating to. Whether that's through really simple charts. So there's some basics, like you should be able to communicate an entire model on one page. If you can't, then you've got work to do. And really, there's only one thing that matters in any business. What is that? It's the one most important thing in any business.
Money.
Cash. Cash. Bring it back to cash. How does this impact cash? What is the risk? So you should have on a page a few charts, not a lot, not more than a few bars or lines or whatever your preference is. I find waterfall charts incredibly powerful as well. Tornado charts as well if you want to look at risk. But don't overcomplicate it. Keep it simple. So planning and budgeting is probably the stock standard place where people say that's where financial modeling sits in the CFO world, in the finance and accounting world. And absolutely it is. But what I've noticed is it's just the plan, it's just the budget. There's no scenarios. There's no what if. There's no sensitivity. There's There's nothing else. Sometimes it's just a budget. It's not strategic. It doesn't go through multiple years, right? So I think more and more it's an opportunity. If you haven't run a process or if you haven't been involved in that, it's definitely an area that you can get yourself involved in. The challenge is in larger organizations, you probably own only a certain portion of the overall budget. What I'd say is try step out of that. Try go, even if it's just going to sit with someone who's got the group model. You know, get that holistic, get that across the entire organization view. If you're doing planning and budgeting and it's just too narrow, try broaden out. I remember when I left investment banking and I joined the NAB, and I had a really constructive, robust conversation, put it that way, with someone in the FP&A team. And we're talking about financial modeling, and I'm very passionate with financial modeling, as you probably know and hear. And I talk about financial modeling in three-way and cash flow modeling. And he says, yeah, we build models all the time. I'm like, okay, do you? So I said, yeah. I said, well, have you built a three-way model? No, what's that? Okay, well, fine. Income statement, balance sheet, cash flow. No, we've only done an income statement. Okay. Have you ever built a model that's been audited? No. Have you ever built a model that's got scenario analysis, sensitivities, and maybe simulations? No. And I said, well, I'm sorry, you haven't done modeling. Like, you've done forecasting. And people think that they've done forecasting and budgeting and planning, therefore they've done modeling. And it's vastly different. Similar, but much more advanced. And I think if you're going to go on that journey to the CFO, you have to pick up financial modeling skills, not planning skills, not budgeting skills, but financial modeling skills. And financial modeling skills is really where, sorry, I jumped. Oh. Financial modeling skills is where you get to hone strategic decision-making. So yes, there's planning, but you've really got to assess options. You've got to look at, you'll get all the slides, by the way. You can take photos, no problem, but I think if you've registered, yeah, you'll get those. Really, really important, right? So you might be doing a plan or a budget for the year, but what about strategic decision-making? What about different options that the team are looking at? What's the strategic roadmap? What's the tech stack? How much are we going to have to invest? What is the size of the team? Are we going to have to go through change? These are one examples of where you can look at financial modeling. Commercial pricing models are another area. So quite often you'll have commercial teams that are looking at contracts. You're trying to look at incentives. You're trying to look at supplier discounts, commissions, network fees, distribution fees. Being able to sit with the business and give them all those different tools to play with scenarios in negotiation is incredibly valuable. And again, it gets you closer to the business, but also gets you to add that value. Now you can quantify the difference if they negotiate a contract with a different rate, and you can show the impact of that. I'm not just saying at a top line, at a bottom line. Showing them the whole picture is really a great way. So again, if you've never done any commercial pricing models, an opportunity to hone your skills. Can you see why when I say you haven't done financial, if you've only done forecasting and budgeting, you haven't done financial modeling? Because you wouldn't have done commercial pricing. This is my most recent one, human resources modeling. So one of the challenges when you go through, and it's public knowledge, Cash Rewards did go through a restructure, and we had to look at all the different teams and who was going to stay and who was going to go. And I hadn't realized up until that point how valuable it is to look at the impacts of decisions around team sizes, redundancies. You go forward, run rate, what's the salaries and wages, we have a budget. All of those elements are reasonably complex. Now we have, a whole lot of complications in terms of right-sizing the team. And now you go through a restructure, and what's the first thing that the new leader of that team wants to know? What's my budget? Well, the budget was done before the restructure. So how do you translate that across? How do you help and empower people that have gone through change to get a handle on their numbers? How do you help them through time. So they might have vacancies, they may be hiring, you may have a restructure and there's vacancies and they're going to be hiring. How do you help them manage their budget? And you can't do that without a proper HR. I'm talking HR modeling. Yes, it's sensitive. It's got people, start dates, salaries, wages. Again, probably harder for you to get your hands on one of those. But if you do have the opportunity, it's another place where you could insert your skills. Alex?
Yeah, when you do build this model, very interesting. Actually, come across something similar to that. Do you need to use some actual number to test it first before you hand over your model to the team? For example,
Well, I wouldn't say it's that's just limited to HR models. I'd say that's all models. You've got to test all models, and we'll come. There's some slides later on that. You've got to make sure that you understand all that. I'm just looking at the clock, and we've got 10 minutes, and I've got still quite a lot of slides to go through. I'm only on slide 8.
And we've got quite a few questions coming through.
Have you?
Now,
Okay. So let's do this. Let me, Alex. We can talk afterwards. Let me whiz through the slides, and then we'll have time for questions. Human resources modeling, operational modeling, understanding operations, in terms of manufacturing, in terms of unit costing and optimization and delivery and service and impacts, particularly around performance is important. Business case modeling, you want to invest in a new technology, or you want to invest in certain things. I mean, obviously business cases are critical to make sure you're getting your return on investment. Again, another example. One of the biggest challenges you have as a CFO is best practices. And so I'm going to give you some tips here, really, really simple ones, not deep 50-page standards that you can go and read, and there's plenty of those. But these are the things that if you're not doing now, you should at least start to adhere to yourself. And this is one of the challenges as a CFO, is making sure the team that are doing this analysis apply some of these things. Do you follow a consistent and logical structure using clear and concise assumptions and formulas? Right? Structure and design, and I think Ian Schnorr said it on the Financial Modelers Corner, the first episode, and I 100% agree with him. It's the single most important thing that dictates the rest of the model, and it's the biggest cause of errors, issues, you name it. You don't have a proper structure and design, you are making your life impossible. And I say impossible because I've had to look at other people's models that don't have that, and it is a nightmare. So making sure that there's an agreed structure, a process, a flow, what's the assumptions, what's the calculations, what's the output, critical, right? Document the model properly. And that's not saying in the model, but even just a flow diagram, just understanding what is the model trying to do. That's so important. Document it so that other people can use it. Do I have a table of contents? Or do I have tab colors that people know what the different things are? Yes, that's somewhat related to design, but also important. Is it self-documenting, or am I going to have to read this deep nested if statement that's got circular loops in with a VBA macro in the back end? That's not properly documented. This is to the point earlier, Alex, around ensuring data quality and reliability, and validating and testing the model and updating it regularly. If you don't update the model through time, how do you know it's ever going to be right? And that's when you learn. So whatever you're going to build it so it's repeatable, build it so the data quality, and you can test your assumptions and improve it through time. That's the only way to get better at it. One-time only models, they're good for deals, and they're good for corporate finance and M&A, investment banking, where I've come from. Absolutely, those are hugely valuable, but they're one-time only. How many times do people take the one-time only model and now they want to use it and regularly update it? A lot, sadly. And then we're like, oh, but this model doesn't work properly. A challenge. Again, another art. Balancing the level of detail and complexity in the model. More detail does not mean more accurate. I'll say it again. More detail does not mean more accurate. More detail means more opportunities for the model to be wrong, right? Now, you don't want to be too high level, because that's also not good enough. So it's that balance, that spirit level, how deep, how complex. Well, there is no one size that answers that question. It's about your understanding the business and what they want to achieve. Avoiding errors, right? Through checks, biases, communication, understanding that there's going to be those challenges, but you've got to hunt them. You've got to prevent them. You've got to use either lookup tables or data validation or something to avoid errors. So financial modeling is a key skill for CFOs, as I've said, through financial analysis, projections, scenarios, strategy, all of those. I'm not going to rattle through all of these, but these are the technical hard skills, right? Spreadsheet management skills, you wouldn't believe how important that is. Can I pick up one of my team's spreadsheets and actually have a look at it? Do I understand accounting? I mean, it's a given. You're a CFO. You should. And I think that's one of the challenges that non-accounting CFOs have when they come into those roles. They may be very commercial, but they don't have accounting knowledge. And so when it comes to things like balance sheets and working capital and revenue recognition, which is a challenge, these are the challenges. Auditing, data analysis, business acumen, these are skills that you can learn and develop. Modeling awareness. Do I understand the different types of models, an LBO, a DCF, an M&A model, sensitivity models? Can I solve problems? Now, problem solving is about lateral thinking as well. Probably a little bit harder to learn, but certainly something that you've got to practice. And tech literacy. We've got to understand technology more so now than ever before. This is coming back to that other slide around what are the softer skills? Communication of complexity simply. Put it as number one. That's why I said that is the challenge as a financial modeler. It's how do I communicate something that is deeply complex into something that is so simple? That takes time. That takes feedback. Put yourself a challenge. One page. One single page. 4 charts. A little bit of words, maybe one table. That's it. If you can't do that, just refine it. And the best way to do it is go show it to a non-financial person and say, do you understand this? That's how you test and learn. Active listening. So not just listening for the purpose, but actively listening and challenging. Constructive feedback, both giving and receiving. Leadership. So some of these things that people voted on, clearly I was a bit psychic in my predictions in terms of some of these points. Vision and strategic. As a CFO, you've got to have leadership. You've got to explain to the team where they're going. Inspire and motivate them. Why would they need to learn some of these skills? The importance. Teamwork, trust, collaboration, learning and developing, networking and building relationships. So if there's one thing that I think is important as a CFO is absolutely being able to communicate and network and be comfortable in your own skin when sometimes it can be a bit challenging. So to be a great CFO, you only need to know 3 things: people, process, and tech. Simple, right? And in that order, people first, right? That's the leadership aspect. Understand the process and the tech comes last. People flip it. Oh, the tech's going to solve all our problems. Tech on top of bad process is an expensive mess, right? And the last thing you want is your people to be disengaged. So these are my tips. Number 1, hygiene. And this is people and process driven. Making sure that I've got Excel spreadsheets that are hygienic. No hard coding, no external links. All of those things I touched on. So important. Tip number 1. Tip number 2, people. If you don't have people in your team that have modeling skills, or at least are open to embracing modeling skills, you've got a big challenge on your hands. Because as a CFO, you don't want to be sitting there building models. You want to empower your team to do that. And if you don't know what that looks like, when another professional modeler comes into your organization, or you come to a meetup, or you go to training, have a look at what they do. Get closer, understand how they design these things. There are so many models on the internet these days, not all of them good, but you can certainly have a look at and learn, So great CFOs value the value of a good model. So important. And the people need to be able to do the skill, not you. You've got limited time. Getting closer to the business, I spoke about that. I'm just watching the clock and I want to give time for questions. Tech, probably my favorite, of course. I've gone for the people and process thing. Now I'm playing with all the tech. And the tech is phenomenal. Through Power BI, through Microsoft Fabric, it's just going leaps and bounds of where we are now. So if you haven't looked at the series that Danielle hoped to co-host last year, we had 3 parts to it. It was all about the future of financial modeling and AI. Definitely go have a look. It's pretty cool. Stay in touch. There's a QR code to my LinkedIn profile. Have a screenshot, but stay connected. You know, keep listening in. I am hosting the financial modeling and Excel meetups in Melbourne. Danielle has kindly donated that group to me. I don't know if she's donated or gifted or you know, poison chalice, because it's hard. Melbourne don't seem to be as open to city life as Sydney people, so a bit of a challenge. But if you are in Melbourne, it is going to be hybrid. So again, come join us.
Everyone is welcome.
But hopefully that gives us, 2 minutes for questions. But I'll try and answer as much as possible.
But I mean, for those people who are in the room, we will continue this. There was just one, I mean, there was a lot of questions and comments that was just going off in the chat, but I won't relay all of it to you. And a lot of the questions you kind of addressed. One of the questions, though, was how can an accountant get into financial modelling? So we've identified that financial modelling is helpful. Yeah, the gateway. So how do you get into financial modelling? And I think that's more the technical skills. And I think there's a lot of places that you can improve your skills with that. Any tips from you, Lance?
So yeah, I'd say financial modelling is a phenomenal skill. I'm not just saying that because I am one, but because it's so multidisciplinary. I'd say it's one of those roles. So accounting is in some ways single disciplinary because it's all about accounting and accounting standards and numbers. Financial modeling is multidisciplinary. It's not just numbers, it's not just accounting, but one of the biggest gaps I think that accountants have becoming financial modelers is their Excel skills. It's just getting good at building good models. So that's why I think the biggest challenge for an accountant getting into financial modeling is more of a technical skill, just to get into financial modeling. But it doesn't end there, because as I said, you can be a great financial modeler and never go beyond financial modeling into a CFO if you don't embrace some of those other disciplinary skills around communication, influencing. You know, so you can build a great model, but if you can't communicate and put it onto one page and go have a conversation with someone, what's the value of the model? Doesn't have anywhere near as much value. Now, if you're sitting in an investment bank and you're building models and that's all you do, that's fine. But most accountants are not there. I was fortunate enough to be in accounting and going into investment banking. But if it wasn't for my stint in investment banking, I would be none the wiser in financial modeling. Back when I was at PwC, the financial modeling team in Sydney hardly existed. Now, Ian leads that across Australia. So I think there's lots of opportunities to learn. Financial Modeling Institute, if you want to learn and become certified and actually cut your teeth into financial modeling, look at the AFM, Advanced Financial Modeler. Both Danielle and myself are approved trainers, and it's definitely a thing that you can go look. So look at the FMR website, listen to podcasts. I think the financial modeling podcast has stopped. I don't know if Matthew's continuing it, but it's season 5 ended. But the Financial Modelers Corner, hiatus. The Financial Modelers Corner has been is launched. It's sponsored by the FMI and Paul Barnhurst. Phenomenal people on there talking about it. I think you were on there as well. Not so long ago. It's an area that you can really cut your teeth in. And I have to say that the chances of you becoming a CFO with financial modeling skills significantly improves. If you're a CFO and you've never built a model and don't understand modeling, you're going to find it very difficult. Why? Looking forward versus looking back. CFOs have to look forward. The best way to look forward is financial modeling. Looking back, you're only ever going to be an accountant. You're never going to be a CFO if you don't look forward.
All right, we might have to leave it there. Thank you so much, Lance. That's fantastic. We will make the recording available to everyone. Did you had some stuff that you were going to send out?
Yeah, so we'll send out the slides, and then I think also the recording.
Yeah, we'll get that out over the next couple of days. So thank you, everybody, and I'll see you again soon.